Hello all, welcome to IAS Bharat. In this video we are going to discuss about the keys for Indian economic questions in GS paper 1. So we have taken the test booklet of series D. So in this exam we have 14 questions from Indian economy. So starting from question number 51, we have economic questions in series D. So question number 51 is about blockchain technology. Which of the following statements regarding the features of blockchain technology are correct? So we already know that blockchain is a decentralized database. So decentralized database, in that records stored in the database may be made visible to relevant stakeholders without the risk of alteration. This characteristics is known as immutability. So unnecessarily another person cannot alter the information stored in the database, and the information or copies of the entire database are stored on multiple computers on a network, syncing within seconds. That's why it cannot be easily altered by anyone from any one server, because the copies are stored on multiple computers. So that is the speciality of immutability. So statement 2 is also right. Then consortium blockchain is a blend of public and private blockchains allowing selective database access. Actually, there are 4 types of blockchain technologies are there. One is public blockchain, another one is private blockchain, third one is hybrid blockchain, and fourth one is consortium blockchain. Actually, the statement UPSC has given is about hybrid blockchain, not consortium blockchain. Consortium blockchain, the information can be accessed by group of organizations, but in the hybrid blockchain only, it is a blend of public and private blockchains. So the third statement talks about hybrid blockchain, not about consortium blockchain. So the third statement is incorrect. Mathematical algorithms make it impossible to change or delete any data once recorded and accepted. So statement 4 follows statement 1 and 2. So the answer is option C, 1, 2 and 4. The next question, 52. An e-commerce revenue model where the seller has control over pricing but does not keep products in stock and instead transfers customers' orders and shipment details to a third-party supplier who then ships the goods directly to the consumer is called as. So we have Flipkart, we have Amazon. So Flipkart, Amazon e-commerce model is operating through drop shipping model. In drop shipping model, there is no need of maintaining inventory by the seller himself. So there is a clue in the question itself. An e-commerce revenue model where the seller has control over pricing but does not keep products in stock. So there is no need of maintaining inventory. So that type of model is known as drop shipping model. In affiliate revenue model, for example, if a YouTuber gives link about a product in his YouTube video, according to the number of clicks, he will get revenue. That is known as affiliate revenue model. So affiliate revenue model does not follow the question. Transaction fee revenue model is just like UPI transactions. For every transaction, the platform will get a commission. That is known as transaction fee revenue model. It is also irrelevant to the question. Then agency revenue model is a traditional model like LIC agent. If he forwards a policy to a particular investor, he will get commission. That kind of revenue model is known as agency revenue model. So that is also not following the question. So the answer is drop shipping model. There is no need of maintaining inventory by the seller himself. So answer is A. Then another question, 53rd question is about Financial Inclusion Index, which is released by RBI. So Financial Inclusion Index ranks the financial inclusion performance on the basis of 3 parameters. One is accessibility, another one is usage, the third one is quality. Accessibility is like supply side of financial inclusion. So how many ATMs are established by banks, how easily the financial facilities are accessible to the people. That is known as accessibility. For accessibility, 45% of weightage is given. And usage is linked with demand side. So how people are effectively using the platforms. So for that 35% weightage is given. Then quality means how grievances are redressed soon. The quality of the services provided by the financial institution. So financial inclusion index gives ranks on the basis of these three parameters. These three parameters are the key sub-indices under financial inclusion index. So the answer is C. Access, usage and quality are the three sub-indices under financial inclusion index. So the answer is C. And 54th question. Which one of the following best describes the key objective of India's Open Network Digital Commerce Initiative? So ONDC initiative is an alternative for the private e-commerce platforms like Amazon and Flipkart. So Amazon and Flipkart are close-ended e-commerce service providers. But the ONDC is Open Network for Digital Commerce. So it can be used by the buyers and sellers from any applications. For using Amazon and Flipkart, we should depend on only the apps they are given. So the first statement says about the prime objective of ONDC is to allow government control over all digital commerce transactions. The statement is incorrect and irrelevant. Government does not want to control all digital commerce transactions. It goes against the liberalization, privatization policies of the government. The second statement, to replace private e-commerce players. So that is not the objective of the government. So making e-commerce segment more competitive is the objective of the government. So government intention is not to replace private e-commerce players. So third statement is to break the dominance of large e-commerce platforms by enabling interoperability across the networks. That is the prime objective. Fourth statement is about to mandate UPI based payments for all online transactions. That is also not the correct option or statement which is relevant to ONDC. So the best described statement is statement C. And 55th question is about Unified Payment Interface and CBDC, Central Bank Digital Currency. Which one of the following statements is not correct? Question is about incorrect statement. So first statement speaks about UPI is real-time payment system, but digital rupee is akin to sovereign paper currency. So UPI gives an option for transferring money in real time. That is right. Digital rupee or e-rupee is just an e-version of normal currency, which we are keeping in our wallets or purse. So first statement is right. In case of UPI, settlement for end users happens instantly as the money gets immediately debited or credited. But in case of digital rupee, there is no settlement as the wallet balance gets transferred to another wallet. So in UPI transaction, there is a debit and credit, and it has to be settled by the banks. But e-wallet transactions means just like we are paying to another person from our purse. There is no intermediary involved in it. Just we are paying another person with the rupees in our hand or in our purse. So statement 2 is also right. UPI transactions are recorded by banks and reflected in bank statements. But in case of digital rupee, no data is captured in bank statements as transactions are from one wallet to another wallet. So in UPI transaction, the settlements are happening between two accounts. So the statements are having the records of the transactions. But in wallet to wallet transactions, there is no intermediary participation to record the transaction. So that statement 3 is also right. Actually statement 3 somewhat explains statement 2. And statement 4, in both cases, UPI and digital rupee, the liability lies within the users and their respective banks. Actually e-rupee is the liability of RBI, not the liability of the user. So the statement 4 is incorrect. So the answer is D. Question number 56. Which of the following statements about real world asset tokenization are right? So what are real world assets? Real world assets are like real estate properties, bonds, securities, gold. These are all real world assets. So real world asset tokenization means getting e-certificates or digital certificates representing real world assets. So if we get digital certificates which represents real world assets, it can be sold easily. The liquidity options are plenty if we get certificates, e-certificates or digital certificates which represent our real world assets. So tokenization is the process of turning real world assets into digital tokens using blockchain technology. So this is the explanation for real world tokenization. The first statement gives a direct explanation to what is real world asset tokenization. So what is the advantage of tokenizing real world asset? It offers 24/7 access and promoting financial inclusion. It can be easily sold and the visibility of the real world asset reaches to many investors and many markets. Tokenization of real world assets will allow the access to high growth investment opportunities for individuals in India. So all three statements are right about real world asset tokenization. So the answer is A. And question number 57, a bond whose proceeds are used only to finance or refinance a combination of both environmental and social project is called as. For example, if it is a green bond, the proceeds are only given to the projects related to solar energy, wind energy, etc. If it is a social bond, it is the proceeds are exclusively given to the impacts, social impacts creating projects like rural housing, poverty alleviation, etc. But sustainability bond is a blend of these both. Sovereign bond is just a government bond. The proceeds can be spent on any purpose according to the discretion of the government. So sovereign bond does not follow the question. A bond whose proceeds are used only to finance or refinance a combination. So that is the hint. Combination of both environmental and social projects means sustainability bond. It is known as sustainability bond. So the answer is C. And question number 58. Which of the following statements about M1 exchange role in MSME financing are correct? So there is a platform called M1 exchange. This M1 exchange facilitates MSMEs to easily access credit and fund support from corporates and financial institutions. We have already studied about TREDS, Trade Receivables Electronic Discounting System, which is given by RBI. Through this platform, MSMEs can give their invoices, unpaid invoices as collateral, and they can get loans from the financial institutions. Actually, they can show the unpaid invoices. The invoice itself acts as a collateral. No separate backup or no separate collateral, asset collateral can be should be given for accessing loans. So this M1 exchange facilitates MSMEs to get loans without providing an additional or extra collateral. They can show invoices itself as collateral. So M1 exchange provides collateral based loans to MSMEs, means the invoices itself acts as a collateral. No separate collateral should be there to access loans. So if we plainly take the statement 1, it is incorrect. M1 exchange provides collateral based loans to MSMEs, and it is incorrect because MSMEs need not provide any additional collateral like real estate assets or gold or government securities. These kind of external collateral will not be needed to access loans by MSMEs. So M1 exchange facilitates for the MSMEs just by showing invoices and accessing loans from financial institutions. So statement 1 is incorrect. M1 exchange provides collateral based loans is incorrect. M1 exchange facilitates discounting of invoices and bills of exchange for MSMEs. That is right. M1 exchange functions as a credit rating agency. Credit rating, the purpose or basic function of credit rating agency is assessing the credit worthiness of the institutions which are providing bonds or issuing bonds. But here MSMEs are not issuing any bonds. MSMEs wants loan from banks and financial institutions. So M1 exchange just facilitates that. M1 exchange does not act as a credit rating agency. So statement 1 and statement 3 are incorrect. Only statement 2 is right. So answer is B. And 59th question, which of the following best describes the term crowding out effect in the context of fiscal policy? Basically the English term crowding out means pushing away. So when government borrows a lot from the market, then the credit needs of the privates will not be easily satisfied. When government is the largest borrower, private corporate companies cannot easily access loans and funds from the market. That situation is known as crowding out effect. It is a situation where government borrowing leads to higher interest rate which reduces the private investment. That is the situation when private finance becomes more costly. It is known as crowding out effect. So answer is B. And question number 62. Which of the following statements about crowdfunding is or are correct? So crowdfunding is a solicitation of funds. That is small amounts from several investors through social platforms. From multiple investors through a web-based platform or social networking sites for a specific project. That is known as crowdfunding. So a lot of small investors are giving money. The entity can pool that money for their project or their business. That is known as crowdfunding. Small and medium enterprises are able to raise funds at lower cost of capital without undergoing a rigorous procedure. For example, if an MSME or small medium enterprise wants to access fund through stock exchanges, they have to list their companies and they have to go rigorous regulatory expectations of SEBI. But crowdfunding is a simple platform where rigorous regulatory methods are not there. So they can easily access funds. So both statements are right. Statement 1 and 2 are right. Then 63, question number 63, different committees are given, some objectives of those committees and the organization under which it was formed. Basically it is a factual question. First committee is R. N. Malhotra committee. Actually this committee was formed in 1993. The committee is related to recommending comprehensive reforms in insurance sector. Actually R. N. Malhotra committee recommended for foreign investments in insurance sector. Recently in 2025, 100% FDI is allowed by the government in insurance segment. But the third column, it is given that it is formed under IRDA. But actually IRDA was formed in 2000. So it does not follow the first information is in these first two columns. So it is incorrect. Then L.C. Gupta committee, it was formed in around 1996 to prepare a roadmap for the introduction of derivatives trading in India. This is right. So it is formed under SEBI. So statement 2 is right. And Urjit Patel committee is related to, it is formed in 2013, related to the formation of MPC, Monetary Policy Committee. But here it is given preparing a reforming bank roadmap for lending housing sector. So it is incorrect. Then YH Malagam committee, it is related to reforms in microfinancial sectors. So it is formed under RBI. This is right. So statement 2 and 4 are right. So the answer is D. Answer is D for question number 63. And question number 64, consider the following statements about NBFCs. So NBFCs cannot accept demand deposits. Yes, they cannot accept current account, savings account deposits. But if they want, they can accept time deposits, not demand deposits. So the statement 1 is right. All the NBFCs are operating in India have to be registered with RBI. No, NBFCs which are providing banking services are only registered under RBI. There are several categories of NBFCs which are providing other financial sector services like share market related services like share broking companies, mutual fund companies. They are all not registered under RBI. They are registered under SEBI. Then insurance related functions providing NBFCs are registered under IRDA. So not all NBFCs in India are operating. They have to be registered with RBI. This statement is incorrect. NBFCs form part of payment and settlement system and they can issue check drawn on itself. This is incorrect because NBFCs cannot provide any debit card, credit card, or they cannot provide any checkbooks because they are not part of payment and settlement system. Then deposit insurance facility of DICGC is not available to the depositors of deposit taking NBFC is right. Only commercial banks, the depositors of commercial banks are protected by deposit insurance facility given by Deposit Insurance and Credit Guarantee Corporation. So depositors of NBFCs are depositing on their own risk. DICGC protection is not available for them. So answer is A, 1 and 4. Then question number 65. Consider the following statements about multi-dimensional poverty index. So multi-dimensional poverty index, the rank is given on the basis of several parameters. Traditionally, poverty is linked with income only. One parameter known as income, but multi-dimensional poverty index takes performance or outcomes from several indicators like health, education and standard of living. So MPI is calculated using Alkire-Foster methodology. In this methodology, not only income is taken, other parameters like standard of living and health, education, improvement in these parameters will also be taken. MPI calculated by Niti Aayog has a total of 12 indicators, but UNDP takes only 10 indicators. So that is the difference. So third statement is incorrect. MPI calculated by Niti Aayog has a total of 12 indicators is right. So the answer is 1 and 2 only. And there is a scheme based question number 25. It is related to Sagarmala program. So it comes under infrastructure. So infrastructure is related to economy. So this question is related to economy related area. So Sagarmala program seeks to achieve port-led economic growth through cost-effective and sustainable coastal infrastructure. In 2015, government introduced Sagarmala program for port-led development. The success of Sagarmala program is reflected in significant growth in coastal and inland waterway shipping along with improved global port rankings. That is also right. Sagarmala 2 aims to position India as global maritime innovation hub aligned with Atmanirbhar Bharat and Viksit Bharat 2047 visions. So all these three statements are basically right. But which of the following relationship among the above statements are correct? The statement 2 validates the effectiveness of the strategies envisioned in statement 1. Yes, statement 2 validates the statement 1 because the success of Sagarmala program is reflected in significant growth in coastal and inland waterway shipping along with improved global port rankings. Statement 3 extends the objectives. Yes, because Sagarmala 2.0 extends the objectives of Sagarmala 1 by embedding them into future-oriented innovation framework in logistics and connectivity, multimodal connectivity. But third statement, they have given statement 1 contradicts statement 3 by focusing only on traditional infrastructure instead of modern innovation. No. Actually, in statement 3, they have said Sagarmala 2.0 aims to position India as a global maritime innovation hub aligned with Atmanirbhar Bharat and Viksit Bharat 2047 vision. So statement 3 is incorrect. So we can go for the option B, 1 and 2 only. So question number 25, the answer is B. So we have discussed the answer keys for 14 questions related to Indian economy in GS paper 1. Thank you.